Imagine receiving money in your bank account without selling any investment, no trading, no selling assets, just regular income flowing into your account. For many investors, this is a powerful attraction of dividend income. Dividends are payments that companies distribute to their shareholders from their profits. Instead of reinvesting all the earnings back into the business, some companies choose to share a portion of their profits with investors. This creates a steady stream of income for shareholders. But the appeal of dividends is not only financial, it is also psychological. Dividend income gives investors a feeling of stability and progress. When investors receive regular payments from their investments, it creates a sense of reward. It feels like the investment is working for them. Even if stock prices fluctuate, dividend payments can provide reassurance. This psychological comfort plays an important role in investor behavior. For example, during volatile markets, stock prices may rise and fall rapidly. This volatility can create stress and uncertainty for investors. However, when investors continue receiving dividend payments, they may feel more confident holding their investments. Dividends can act as a reminder that companies are still generating real profits. Another reason dividends are attractive is the idea of passive income. Many investors dream of building a portfolio that generates regular income without needing to sell assets. Dividend-paying stocks make this possible. Over time, investors can accumulate shares in companies that regularly distribute dividends. As the number of shares grows, the total dividend income also increases. This creates a powerful income stream that can support financial independence. Dividend income is especially appealing for long-term investors and retirees. For retirees, dividends provide a way to receive income while keeping their investments intact. Instead of selling stocks each year to cover living expenses, they can rely on dividend payments. This approach helps preserve capital while still generating cash flow. Dividend investing also encourages long-term thinking. Investors who focus on dividends often prefer stable, profitable companies with strong business models. These companies typically have consistent earnings and strong financial positions. Because of this, dividend investors often hold their investments for longer periods. This long-term approach can reduce emotional decision-making and frequent trading. Another psychological advantage of dividends is visibility. Capital gains only become real when an investor sells an asset. But dividends provide tangible returns that investors can see and receive regularly. This makes the investment experience feel more rewarding. However, dividends are not always guaranteed. Companies may reduce or suspend dividend payments during difficult economic conditions. This means investors must evaluate the financial strength of companies before relying on dividend income. It is also important to remember that high dividend yields can sometimes signal financial risk. A company offering unusually high dividends may be facing financial challenges. Therefore, investors must balance dividend income with company quality and long-term sustainability.